ever watchful, ever conservative, and a very clear focus on inflation management and not losing out. Because there was a point there, just to mention that the progress of inflation, disinflation actually, the food shocks are actually putting span in the works there. That is something to watch out for. The street was expecting some flagging off of change in stance towards neutral, but that's why there was a sharp cut in the market momentarily. Then it came back because the focus remains very clear. Abhik Barua is joining us again. R. Gandhi is also here with us. Harsh Dugar and Sachidanand Shukla. All the panelists are joining us now. Mr. Gandhi, let me come to you first. This clear inflation hawk kind of that there is, by no means will we give up our fight against inflation. And until inflation clearly comes under check, the durability of growth cannot be achieved or aimed at. Do you think that was very, very clearly reflected in the speech today?
Exactly. What you said is right, because inflation consistently coming down, that is what will be the policy objective, and to bring it closer to 4. When it is varying in between 2 months, it comes down, third month it goes up. That means that monetary policy has to be worrying about getting a steady decline towards the target rate. So that's why complacency is not warranted. Governor has very clearly mentioned, and the MPC statement also clearly focuses on that aspect. Yes, it is conservatism, you may call it, but it in the long run, to give a stable growth platform, inflation will have to be very manageable at near the target level.
Right. Abhik, I'm sure you're disappointed because you were moving in with some expectation on perhaps at least a stance change, if not a move on rates.
Sorry, was that for me?
Yes, for you.
Yes, I'm certainly disappointed. I thought that there would be some move towards, I didn't expect a stance change, but some kind of a languaging towards a more accommodative position forward. Maybe it was implicit in the comfort with the inflation trajectory directionally, but not with the speed. But certainly, this is from the old playbook, and clearly it's very, very focused on just one aspect of the growth inflation dynamic here. I think the fact that there is a divergence within the Monetary Policy Committee suggests that some people would think very differently and perhaps be in a slightly different camp from the ultra-conservative stance that the RBI has followed. I'm certainly disappointed, but this is the old playbook and this was the consensus, and they stick to it. But let's not forget that there are costs to this. And, just as an early pivot or a premature pivot can, cause problems down the road, the inability to pivot or create room for a pivot could lead to problems later on. Again, this is just not my words, but this is what the dissent within the MPC is about.
Harsh, let me come to you. Also because you're representing a bank, clearly the problem of deposits and liquidity, and in fact, he went on to say that the issue can become structural if the mobilization of deposits, slows down, and also the top-up loans matter. We have seen in the past that RBI has been very clearly going after some of the speculative parts of the unsecured loan business, but now it appears that even home loans and gold loans, the top-ups actually could be going in that direction. What do you make of these two parts?
There are two parts. One is on the deposit and the loan growth. Well, there has been a little bit of a moderation in the loan growth. Deposit growth remains a challenge, and the governor, while articulating it, also mentioned the focus should not just be on deposit growth, but also on focus on the household savings rather than on bulk deposits. So that is one point which I think banks are grappling with, but needs to be done. The other part is the money going into the capital markets is a double impact. One is on the deposit growth, and the other is on the money actually being diverted to the stock markets. Earlier it was on the personal loan part. Now I think they're indicating that even the top-up loans, whether home equity or gold, is going. And rightly so, RBI has guided us to be a little bit more cautious, both in terms of credit evaluation as well as end-use monitoring. I think that's something which banks need to be cautious about.
Right. Mr. Shukla, I want to get you in on the discussion as well. What did you make of the kind of global environment that we're currently in, and the fact that the governor alluded to the fact that the Indian economy continues to remain resilient even though food inflation is not under control, or at least away from the targeted inflation figure?
Thank you. I think if you look at the policy, the governor came out as being simple, sensible, and steadfast in terms of his objectives, right? Please remember, the reputation of a central bank is built on its monetary policy stances and what it does on that, rather than just the forecasts or some of the numbers that they talk about. Make no mistake, the global sands are shifting very fast. The narrative is shifting very rapidly, and there is a regime change from the last policy. And the governor is very, very cognizant of that. When things are so volatile, it does not really make sense for the central banker to be really changing things a lot. So they've stuck to the old playbook. And if you look at what they typically do, I mean, the RBI last 8-9 policies, they have kept the rate as well as the stance unchanged, which I think is the right thing to do. But also, he's kept his eyes steadfast on the macroprudential norm. So he comes out with a warning and then follows it up with some sort of a macroprudential step. We've seen some announcements on that. But having said all of this, I think I agree with Abhik in the sense that the RBI is now cognizant and must start counting the losses. I mean, just to give you some numbers, if you look at the total, credit book, 170 lakh crore kind of a number, and if interest rates are higher by, say, 200 basis points, just the industry alone is going to be paying about 76,000 crore more in terms of interest costs, right? People who borrowed, I mean, for housing, there the bill is about 54,000 crore every single year, higher than last year. People who borrowed for automobiles, for example, the bill has gone up by about 12,500 crore. So I think it is time for the RBI to also reflect on the costs and then start counting some of these losses and the sacrifice ratio. But for now, I think this is exactly what the doctor ordered.
Right. Abhik, I want you to come in here. I mean, the fact that our own central bank has kept rate status quo for a 9th consecutive time. We've heard BOJ as recent as this week sending a very dovish signal. There are talks that perhaps not just a September rate cut, but even the Fed could actually move faster than that. The money markets were even anticipating as high as 5 rate cuts within this financial year itself. Do you think the governor back home is going to stick by with what the Indian macro environment is like, or do you think he's going to follow maybe the Fed or the BOJ too this time?
I wouldn't. I think the BOJ is a very different animal in the sense that they have. I mean, I think a lot of the turbulence came about because they exited from a policy that had prevailed for almost 15 years, which was of extreme monetary accommodation. And some of the recent statements, particularly yesterday's statements, were just a reaction to the turbulence that this change in stance had caused. So I don't think the Bank of Japan really should be a reference point. But I mean, if you look at the G7 central banks, including the Fed, although it hasn't cut rates yet, I think the narrative is changing. We remain firmly focused on domestic fundamentals, etc. But I think there has some amount of global coordination is desirable because economies don't tend to be decoupled. And if the Fed is signaling that or is sort of kind of accepting the fact that perhaps rate cuts are desirable, it means that the US economy and the global economy are likely to slow down. This would have spillover effects on India. So at some point, we'll have to count the costs, not just as Sachinandan put it, that the cost of borrowing has increased significantly, but also the possibility of being at the receiving end of an adverse downturn in the global cycle and what it does to our demand. So I think there are costs at different levels that need to be considered, and perhaps this was the optimal move at this stage, given the current conditions. But we'll have to move towards a little more recognition of some of the sacrifices that we make in fighting the inflation war.
Mr. Gandhi, let's talk about the other part of the speech which alluded to clear signs of picking up a private side of the capex. Up till now, it has been front-loaded, the capex in our country, by the PSUs or the government side. But it appears that various sections of the policymakers are nudging the private sector now. Are you seeing much more concrete signs yourself?
Before answering that, two follow-up comments on the earlier one I wanted to mention. One is about why the stance has not been changed, even though some expectations were their stance could be changed. That's a quick reaction to that comment. Possibly MPC and Reserve Bank kept in view that their inflation projection for the current quarter and next quarter, it is higher than what they had earlier forecasted. So that is why possibly the stance change had not happened. That is one. The second comment was related to Bank of Japan. The Bank of Japan, it's not dovish stance. They actually increase the rate, and then further rate, the increase may not come quickly. That's what is mentioned. That is not a dovish stance. That is by way of clarification. Okay. Now to your question, specific question about private consumption. Private investment to be nudged by both by the government and by the Reserve Bank. Yes, certainly. In the last several quarters, we have seen that private investment is picking up. Credit pickup also is quite robust. So that way, in the budget, definitely there has been some indications to support the private investment. Government continues its infrastructure-related expenditure, capital expenditure. So that will, and having consistently put in money on the infrastructure for several years now, that the benefit of
Right. Harsha,
pick up.
sure. Yeah. Harsha, being a banker, what are your thoughts on the growth, the GDP growth for the first quarter of next year, which the governor has pegged additionally? This time they shared 7.2%. Do you see the follow-up actually when you deal with your clients or on ground? Because there would be a direct correlation, isn't it?
See, this is the first time the RBI announced the growth forecast for Q1 FY26 and they maintained it at 7.2. Very frankly, if you look at many of the indicators, they are obviously indicating towards a stable growth. The reason why they've also kept price stability on the forefront and inflation management is to ensure that we have a sustainable growth. Now, coming down to corporate clients, there's definitely a clear optimism in this in the corporate world, where they are reasonably bullish about it, but people may change their views about growth rate being at 7.2 or a 7 or a 7.4. But the moot point over here is they're extremely bullish and optimistic about the outlook. So even the capex which people are talking about, there seems to be a little bit of a pickup which seems to be there now, even in the private sector. Part is obviously a cascading effect of the capex which the government has been doing in any case. And secondly is hopefully the pickup in the rural demand, which people are talking about now. A little premature, but yes, it seems like that. So if I look at a sustained consumer behavior in terms of demand, both rural and urban, and the outlook remains optimist. So I personally do think that the corporates have been, and they have been indicating that they are reasonably optimistic and are planning capex, keeping that in mind.
Right. Abhik, what is this entire US data and the weakness which has actually triggered that fear that global growth could also come under pressure in months to come. How potent is this risk in your view?
I think it is potent in the sense that perhaps the fears about a sharp slowdown in the US are a little overplayed. And this really came on the back of some of the earnings numbers, a lot of it which were in the tech sector and really the AI focused tech world, which really doesn't sort of reflect what is happening in the underlying economy. But I think the US is, I mean, if you look at some of the indicators, the US is slowing down. It's not on the tip of a recession. But I think Japan is important because Japan, as Mr. Gandhi pointed out, has turned hawkish, and we kind of underestimate the quantum of funds that Japan, being a very low-cost lender, provides, both in terms of carry trades as well as investable long-term funds, to corporates across the world. And if that were to change, then I think that poses a risk. China is sluggish. So I think all these factors point to a slightly more, dismal global situation than prevailed this year. And my, limited point is that we cannot be entirely insulated from that. Although we, in terms of our export share of total demand, is limited. And besides, I mean, if you just, I'm going to kind of nitpick on what Harsh said. I mean, I think as bankers, we are saying that yes, there's a little bit of private capex which is coming. It's not, and Sachidanand is the best person to sort of inform us about this, but it's certainly not the beginning, or I mean, we don't have the signs of a broad-based, full-blown capex cycle from the private side coming through. And consumption, I mean, people are still kind of a little wary about how consumption is faring, whether the rural demand story is really sustainable or not. So I think there are issues both on the domestic and the global economy.
Sense could go on discussing this, but Avik, we'll let you go. Kaustubh, thank you so much for taking the time out and joining in today as well. And Harsh, glad that you could take time out from your busy schedule and join in today. Let me also welcome on board Kaustubh Gupta, co-head fixed income at ABSL AMC as well, joining in on the show right now. Kaustubh, hi, morning. Good to have you on the show. For a 9th consecutive time, the MPC has chosen to stay flat, or rather not move on rates. How is it that you've read into the kind of hawkish commentary, especially pertaining to inflation?
Good morning, Aisha. Yeah, so it's a little bit of a disappointment on that front, given that most of the clouds which are around inflation seems to be getting out, given that the sowing data is showing that the year-on-year number is already ahead of last year, and the distribution of rainfall has also improved. Governor himself on his conference said that there are talks about whether they should look squarely on the headline inflation, or they should also take into account the core inflation, which has created a new low in this series.